How is the 4-year cycle developing? What are the macro targets? How are the high time frame charts looking? And will Bitcoin break over 38k? These are questions we're answering in today's video. Let's dive in. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having an awesome start to the week. In today's video, we're going to be taking a look at the 4-year cycle, the macro, monthly, weekly, and daily charts, and the short-term price action, discussing key levels you should be watching across all these different time frames, key indicators you can watch going into the current and next cycle, and of course the likelihood of a break over 38k. Before we get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and structural information, and the relevant economic events. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the third link down below. You will get access to updates, charts, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in trading, join our VIP group. We post trading setup with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. If you're interested in getting access to that VIP channel, you can go ahead and contact me in the pinned comment of the free channel. You can also find our entire trading track record right over here. 31 months of data. Go ahead and click any month. You can see our win rate for those months. Not only will we get access to our VIP channel, we also get access to the group chats, the general chat, the trading chart and education chat, the trade setup chat, the help, news, and daily video chat. Go ahead and join over 600 members in that group. Let's dive into the video. Starting on the market data. How are we currently looking? 24-hour volume is creeping back up. Of course, it is still the weekend in the US. Australia would just come out of the weekend. A lot of Asia just coming out of the weekend. So volume is starting to creep back in. Plus 3.28% for the last 24 hours, sitting at a total of 62 billion. Overall liquidations are down 2.19%. Again, pretty negligent change over here at 76 million. Looking at those 24-hour liquidations, of the 76 million, 53 million came from short positions and 22 million came from long positions. Taking a look at Bitcoin's price action, we can see that uptrending support held, and we discussed in yesterday's video, while this uptrend holds, the probability of a continuation back to 38 is higher than a breakdown, provided we hold above this level. The moment we break from this uptrend, that is when the probabilities shift in favor of the continuation downwards. As per usual, people taking late shorts at support resulted in a nice strong move upwards, and of course those shorts that got taken down in this range have now been or are being liquidated. So the price is looking pretty decent on the short term. We'll come back and discuss exactly what is happening in just a moment. Moving over to the volatility index, again, we have seen the volatility index rise over the last couple days of here, which is a very good sign on the 30 and of course on the 60. Again, we do want to see that volatility index continue to rise with the price action to overall signify we do have strength. If we do see discrepancies between what the volatility is doing and what the price action is doing, that could be a warning sign of potential exhaustion and weakness. Moving over to the DXY, the DXY is still looking relatively weak over here. However, we do have to keep in mind the closer we come to this support, the greater the probability of a bounce starts to develop. Remember guys, if you're looking at a downtrend and you start a downtrend here and your target is here, the further along this trajectory you go and the closer you get to the support, the greater the probability the bounce starts to become. So we're looking at the price action over here. The DXY is starting to look like it wants to bounce again. We do still expect to move down to this local low range, but it is starting to look like we are getting some bearish exhaustion here for the DXY, something to consider moving forward. Overall, the DXY is very much in a downtrend while it remains below this downtrending diagonal trend line. If we are able to break above this downtrend diagonal trend line, we would expect a continuation to 108. Until then, we are in a downtrend. As you know, falling US dollar strength is generally good for risk asset markets. We do generally see asset prices rise in valuation compared to the dollar. So looking at S&P 500 over here, we have seen a little bit of a break upwards. Again, we are looking relatively strong while we remain above this diagonal trend line. If we break above this overall high time frame diagonal trend line, we can expect then a continuation to retest 4,800. If we do break below this horizontal red box, that would indicate the current short-term breakout has resulted in deviation, and we could expect a correction back to retest the POC. So overall, on the short term, we are looking very good. However, we have not broken out just enough yet to confirm this uptrend. We need to go a little bit higher, ideally breaking over this local high and this diagonal trend line. The same thing goes over here for the Dow Jones. So respectively, we have that downtrending trend line, we have that horizontal range of support, we have that local high point. These are the key three levels. While we remain above this red area, we are technically above support. So we do have this downtrending resistance we're broken out of over here. We do still expect a move towards our downtrending diagonal trend line. If we break this downtrending diagonal trend line, we will likely see a move to retest this high. If we lose this local support, we can then expect a correction lower. So as of right now in the short term, the Dow Jones is pretty bullish. Moving over to the Bitcoin chart, guys. So much to talk about today. We're going to quickly discuss what we'll go over, and then we'll jump into it. So we're going to discuss the 4-year cycle. We're going to talk about what it is. We're going to talk about the phases of the 4-year cycle. We're going to talk about the bull market. We're going to talk about when the bull market will start according to structural levels. And we'll go ahead and take a look at a variety of different technical indicators. We'll take a look at potential bull run targets. We'll also take a look at the weekly charts, the fortnightly charts, the daily charts, and of course, the short-term price action. So before we get into Bitcoin, a quick little announcement from Bitget and BingX, and then we'll jump in. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. So let's jump into Bitcoin, starting on that 4-week chart, that monthly chart, that 4-year cycle chart. For those of you who don't know what the 4-year cycle is, really quickly, the 4-year cycle is essentially a date range trend between halvings. Okay, when halvings occur, Bitcoin is expected to appreciate in value as the total supply or mining rewards drop in half. So obviously that creates an amount of demand in the market that pushes the price up, or should push the price up, and that's what the 4-year cycle is kind of based around. So what we see over here, the 4-year cycle, is simply not the price action, but these different zones. We have the red zone, which is our bear market zone. We have our gray zone, which is our accumulation zone. I don't know why I wrote an M. And we have the green zone, which is the bull run phase, okay? The uptrend, the major uptrend phase. At the moment, we can see Bitcoin is in this gray zone. So according to the 4-year cycle, we are not technically in a bull run yet. However, we do have to keep in mind that we are not in a downtrend either, okay? The downtrend ended when we broke through this phase into the accumulation phase at 16.5k at the start of December 2022. If we do take a look at the 4-year cycle again, we can actually also see the average time between cycles is more or less very similar. On average, we see 12 to 13 months of bear market, okay? 12 to 13 months of bear market. On average, we see about 16 to 17 months, okay, of accumulation. We can see 16 to 17 months of accumulation. And on average, when it comes to the bull run, we generally see around 19 to 18 months of bull market. So if we extrapolate that data forward, we can say on average, we would expect the next bull run top to be between October 2025, okay, and November 2025. And that is based on the 4-year cycle alone. Nothing else, just simply the 4-year cycle. So when will the bull run officially start? And what are the key macro levels we are watching? So if we dive into it, there are 2 ways we can answer this question. From a structural perspective, which is essentially a price perspective, or from a technical perspective, which uses a variety of different indicators that tells us the relative strength of price action at a particular moment or period of time in comparison to prior price action, which could indicate whether or not we have strength or weakness on a macro scale, which could again indicate whether or not we are in a bull run. So first and foremost, from a price perspective, we have 2 key levels we are watching. We have the dotted trend lines, and we have the horizontal levels. The horizontal levels are the base of support before capitulation of the prior bear market. The base of support before capitulation, okay, which is a large correction to lows, okay, base of support before capitulation of the prior bear run cycle, okay? And the dotted trend line is the dead cap bounce high, the highest point Bitcoin reached after a bounce from that base of support, okay? Those are the key levels. If we take a look at the price action, we can see every single time we have closed a monthly candle above that base of support, we end up retesting that dotted trend line. We saw it back in 2016, okay? We broke a monthly candle above over here. In 2019, we retested a dotted trend line, and we have broken a monthly candle back above it in 2023, and the dotted trend line is sitting at 48,000. If we go back to this chart over here, we can see $48,000 on a 3-day chart, and we'll go ahead and bring up that VRPV in a second. You can see $48,000 according to the VRPV is a very key level of resistance. You can see right over here, that huge chunk. There it is right over here. I'll circle it again, actually. Circle it over here. A huge chunk of resistance after a significant plummet in the VRPV, suggesting this is a key area of confluence. It's a key area of resistance on the high time frame chart and a very important level. So it does signify that 48K is an important level. Furthermore, if we remember back to the last cycle, this was the 200-day moving average retest on the weekly chart before we saw a huge correction downwards. A lot of people were expecting a continuation back up to 100, back up to 90 from this level. It was a fake out. It was a dead cat bounce. It was a fake out upwards over 200 before a correction aggressively toward the downside. So 48K is a very important level. If we go back to that high time frame chart, guys, we can see every single time we break a monthly candle above the dotted trend line, according to our structural levels right over here, okay, right over here, we can see we actually continue into a bull run. Now, this is sometimes delayed from when we enter the bull run phase, but again, the bull run phase doesn't indicate we're starting a bull run straight away. It tells us we will see a bull run within this green phase at some point. How can we actually define a bull run? Well, a bull run is simply defined as a period of price action with increased volatility, volume, momentum, and strength in comparison to prior periods of price action. The best way to measure that is using a simple trend angle. If you take the trend angle from the lows to that dotted trend line, in both instances, from the lows to the dotted trend line, and then the trend angle from the breakout to the high, you can see the trend angle significantly jumps around 40% to around 60 to 70%. The trend angle simply reflects overall strength. If we see a larger move in a shorter period of time, it tells us there is more strength, there is more buying, there is more bulls in the market, there's more money coming into the market, which on a broader scale, on a higher time frame, is what a bull run really is, right? That's really what a bull run is. An extended period of aggressive upward price action. So that is the first one. From a ratio analysis, we can do a ratio analysis to potentially project or predict the high of the next cycle. What we can do is we can take the measured move, okay, from the breakout to the high. We can take the measured move from the breakout to the high, we divide them by each other, and it gives us a number which is around 0.19. What we then do is we take this number, this 509, we divide it by 0.19, and it takes us to around about $98,000. So it tells us, according to our ratio analysis, we could expect a minimum price of the next bull run to be around $98,000. Now, there obviously are reasons why Bitcoin could go higher. There are reasons why Bitcoin might go lower. But according to our ratio analysis, from when the bull run starts to the peak of the bull run in the prior two cycles, we take that ratio, we divide it by each other, we apply it forward in the next cycle. It tells us the average expected growth is going to be around 96% from 48K, which will take us to around $97,000, $98,000. Do I believe that personally? No. Do I think it's going to happen? Who the hell knows? I'm not trying to predict the future. I'm just giving you the information for the sake of it. It's something interesting to look at, potentially look forward in hindsight to see how accurate it is. Pretty interesting. The next really interesting piece of data that we're going to be taking a look at is going to be, okay, one that I love. Personally, one that I absolutely love, that I think has been absolutely phenomenal, is from a technical perspective. It is going to be this red line. I'm going to go ahead and change this red line to a thicker red line, and we'll take off this one to make it more obvious. This is the Ichimoku Cloud baseline. It has been phenomenal at predicting when bull runs start and when bear runs start, or bear markets kind of start. If we take a look, every single time we close a monthly candle above this level, we stay above. Okay, we stay above the baseline of the Ichimoku Cloud for a very extended period of time until we close below it. This is the start, okay, of the bull run according to the Ichimoku Cloud. Let's go ahead and draw a vertical line. This is the start of the bull run according to the Ichimoku Cloud. We'll go ahead and draw a green line. And this is the start of the bear market according to the Ichimoku Cloud baseline. You can see a significant period. If we go forward, the start of the next bear market started over here. The start of the bull run started over here. So you can see how accurate it has been. Obviously, it's not predicting the tops. Okay, it's not predicting the bottoms, but it's predicting this middle period. It's telling us when does a bull run officially start and when does that bear market officially start. That's what it's telling. So it's very important to watch that going forward. If we do see a break of that level, that is likely to occur. And of course, that could indicate we are officially entering a bull run. Now, it's also important to note this will actually occur prior to the monthly candle break over 48K. So it may be a slight leading indicator to that monthly candle break of 48K, or at least a retest of 48K, something to watch out for. Let's go ahead, guys, and jump into the weekly chart. So on the weekly and fortnightly charts, the most important thing we are seeing here is the retest of the Gaussian channel upper band. A break of this level will be absolutely phenomenal for Bitcoin and will result in a strong continuation upwards. Again, the Gaussian channel doesn't tell us where the price will go. It tells us the overall direction of which the price is likely to go. We have to look at our structural levels. We do know we have that 48K support. So if we do break above this level, which is around 38,000, we are then expecting a move to 48K. Moving over to the short-term price action, guys, this is the interesting stuff because, again, Bitcoin is retesting that $38,000 to $40,000 level. And the $38,000 to $40,000 level, okay, is the first and probably the only major, okay, the first and only major resistance between 32,000, which is the point of which Bitcoin enters a monthly uptrend. So 32,000 as a monthly trigger, meaning while we were below 32,000, we were in a high time frame weekly uptrend. We broke above 32,000, we're in a monthly uptrend. Okay, so the monthly uptrend and the bull market trigger, which is 48K. So it is the first major resistance between this upper level and this lower level. So with that, resistance is resistance until it is not, and therefore we could potentially see rejections here. We need to go down to the smaller time frame to really discuss that. However, if we do see a break over 38K and 40K, we are very likely to see a continuation to the range high, which is going to be 48,000. That is why this short-term price action is so significant. So we'll come and talk about the short-term price action in just a moment. But before we do, total cryptocurrency market cap. The total cryptocurrency market cap is looking pretty decent, right? And if we look at it from a high time frame perspective, it's going to show a very different look. Okay, it's going to look very, very different in comparison to if we look at it from a short-term perspective, right? So we're looking from a high time frame perspective, we see we have this major point of resistance right over here. This is kind of like the line in the sand, the separating point, you know, the big important barrier, you could say, we are looking at on the chart. While we are above this level, we are bullish. Okay, the total cryptocurrency market cap is technically bullish. While we are below this level, we are technically bearish. So the most important thing really is that we don't come back below this level, because coming back below this level could confirm deviation and a continuation downwards. We would not like to see that, okay? We would like to see the total cryptocurrency market cap remain above this level to tell us the entire cryptocurrency market is in a macro uptrend. Remember, macro uptrend is above this level. We lose that level, we enter a weekly downtrend. Very important stuff. Moving over to the altcoin total current market cap, which is at the total 3 market cap, excluding Bitcoin and Ethereum, we can see we have broken above this downtrending diagonal resistance. We've had 3 tests. We broke out on the 4th test. If we go ahead and invert the price action chart, you can see this is a very typical reversal structure, okay? A very typical reversal structure. We can see we have higher lows starting to develop in this range, okay? After a nice strong move toward the downside, we can see we have a downtrending resistance which is broken up. This overall suggests, okay, rising momentum. This overall suggests a reversal. This is a reversal structure. It's telling us during this cluster of price action, we've had price move down and the bears were starting to lose control. With that, the bulls were gaining control. Since we broke above this downtrending diagonal resistance, the bulls are officially in control. So the question isn't whether or not we're in an uptrend. The question is, will the uptrend continue on a higher enough time frame before, okay, it breaks back below? So it doesn't matter if we come back and retest it, because we're still in an uptrend. So the question is no longer is Bitcoin in an uptrend, is the total crypto market cap in an uptrend? That's not the question anymore. The question is, can we stay in this uptrend for long enough to the point at which we can actually develop a bull run from it? That is the question we are challenging. That is a question we are facing right now. So let's go back to the short-term chart. Bitcoin is looking good, right? We're looking pretty decent. And again, we are now in this converging point between that 38 and this uptrend. We absolutely need to break above 38,000 to see a continuation upwards. Now, while we remain in this zone, I would not be aggressive with your positions. I simply would not be aggressive. You can scalp trade, go ahead and scalp trade or Bitcoin all you want, but I wouldn't be taking massive swing positions on consolidating coins unless you see certain breakouts from those consolidations. For example, you see your altcoin is consolidating and it breaks toward the top side, you could potentially look for a swing long. If you see your altcoin that's consolidating and breaks toward the downside, you could potentially look for a swing short, but keep your stop losses tight. Now, the reason I'm saying I wouldn't be aggressive with those positions is because Bitcoin is consolidating between a bullish trigger, okay, and a bearish trigger. If we break above this uptrend, everything will continue upwards. Altcoins, cryptocurrency, Bitcoin, everything will likely continue upwards. The decisions on your investing and your trading will be very obvious, okay? Be hedged toward the long side. If, however, we see this consolidation develop and then we see a breakdown and you're hedged long, well, then you're going to lose every trade you took. So that's not a good idea. If we see a breakdown from this uptrending support line, we could then see a correction downwards. So bringing up that VRPV, if it wants to pop up, we can see over here, according to our VRPV, we have a huge cluster of support around 34 to 34.8. So if we break from this uptrending support line, we will likely see a continuation into that range, most likely retesting 33.35, which is a local low point, and that is going to be our base of support. If we lose 33.35, we have a massive volatility candle over here, according to that VRPV, which we are very likely to fill. So we lose 33.35, we are very likely to see a correction down to 30,600, potentially 30,200. Now remember, if we retest 30,200, we are still macro bullish. We are still bullish provided we hold a monthly candle above 32,000. It's only if we close a monthly candle below 32,000 are we starting to look really weak again, and it's not looking good on the charts, okay? If we see this, that's healthy, okay? If we see this, that's healthy. If we see this, that is not healthy, okay? If we flip this 32K back from support into resistance, that is very bad for Bitcoin from a macro perspective and from, of course, a short-term and immediate perspective. So, what are we looking for in the charts right now? I am watching this converging point. I am watching how this develops, and it is expected to finalize within the next 10 days. Generally, when it comes to converging points, we don't see it actually finalize within this last segment. We usually see it finalize within the last like 70%. So the last 30%, we are likely to see a decision around about the 28th to the 30th. I'll be looking for this range of years. 28th to the 30th, I'll be looking for a latest decision of whether or not it's going to break down or break upwards. Now you have to remember, the higher the price action goes, okay, the higher it breaks down, the more significant this area of support becomes, which is a 36k level. If we had to break down over here, it'd be having a much more drastic impact on the chart than it would if we broke down over here. So we have to keep that in mind too. I'm going to wrap the video up because we're just going way over time. If you enjoyed today's video, smash that like button. Check out the Crypto Academy, guys. If you're interested in learning TA, that is a place to do it. 10-unit course, we teach you TA from the ground up. It is everything you need to start off your trading and TA journey. If you're interested, there's a link down below. Thanks for watching. Catch you guys on the next one. Have a great day. Cheers.